Welcome back, passive income investors. A link to an article one of my friends wrote that I found really intriguing, and it is called The 7 Dividend Beasts to Hold Forever. And I'm going to give you a quick introduction, and we're going to analyze a couple of these dividend stocks because they are aristocrats, which means they've been paying dividends and increasing them for more than 25 years. And I have, in fact, never really looked into any of these, but let me give you a quick introduction because he did a phenomenal job on this article. And it just says, we live in times when traders have dreams of getting rich overnight, which is basically a lottery ticket strategy that can leave you broke and confused. And I feel like that's going to be most people with all the news media driving us about the Doge, the Elon Musks, and your AMCs of the world. It's always smart to have a nice diverse portfolio of some of these companies that over time will very likely continue to outperform the S&P 500 purely off dividend increases, which we can see right here, folks. They kind of show you what the aristocrat performance looks like if you just built a portfolio of these stocks over the long term. And it's hard to conceptualize because we don't usually take dividends into account for our capital gains as well. So let's get into this. We're going to review 3 of these aristocrats, and I'm going to leave the article link in the description below. You guys can sign up and download it. It gets sent to your email if you want to read through this entire list, because like I said, these are stocks most people probably haven't heard of because I'm fairly unfamiliar with these. And we're going to kick it off with numero uno being Air Products and Chemicals Inc. This is a rather unusual company that obviously deals with a bunch of cleaning materials, but in a manner that you might not be aware of. Now, their PE ratio a little bit higher than the rest we're going to look at, but it also has the highest dividend yield we're currently going to look at, sitting at 1.99%. And just taking a look at the increases, we go back to 2011 here. We can see the dividend 10 years ago was sitting at about 58 cents a quarter. Today we're sitting at about $1.50, well over a double increase. So you can say technically if you were getting a 2% 10 years ago, today you're probably sitting closer to a 5 or 6% yield. This is the whole Warren Buffett story all over again with Coca-Cola. He's making about a 50% return on Coca-Cola just from the dividend increases. And we don't see that stuff bake into the stock price. It's kind of like the little hidden fruits that fall off the tree when you hold these kind of stocks. And just taking a look at the return of Air Products and Chemicals on the asset versus liability side, and then we'll look at the revenue. They've done a really good job because their assets have increased year over year, currently sitting on about $25 billion. And I want to see how much of that sits in cash. They got about $6 billion in cash right now. Minusing that from the $12 billion in liabilities, well, they got about 12 or 13 billion in underlying assets here, folks. Now, they have been missing some recent quarters and the revenue is relatively stable. So let's go and find out why. But first, before we take a look at the exact products, what we always want to do is just kind of take a look at the dividend payout ratio to see if there's room to grow it. And I always like just taking a look at the profit margins themselves, because this is going to let you know how much of that cash flow coming in is actually converting. Because usually these dividend aristocrats have really small margins, and this one's actually right at par, bringing in a profit margin of about 20.39%, which is just beautiful because a lot of companies we're going to see maybe have a 10% profit margin. And on the payout ratio side, this one definitely sits on the higher end of the spectrum, about 65.4%, which is going to be the largest we're going to see out of the rest of the stocks we're going to look at. So they don't have as much room to increase the dividend, but they definitely have a lot of room to grow it from here on in. And just so taking a look at the website, what this company is exactly doing is insanely industrious. They deal with gasification, CO2 capture, and H2 for mobility. So not only are they dealing with hydrogen, but they're actually capturing the CO2 and all the emissions that come off a lot of the gas plants, and they're finding a way to refine it, get it so it's not going out into the air, and actually turn it into another usable product. And this company is so insanely diversified. I mean, you just have to go into the industries. You click this, guys, and just take a look. Aerospace, analytical labs, and research science, automotive, beverages, like they're in everything from food to electronics, chemicals, medical, the whole 9 yards. And my favorite always being aerospace. Of course, any company that is a conglomerate needs to be in the aerospace sector. And just taking a look, guys, they do a lot of different things, from the environmental testing, they do heat transfer stuff, leak detection, lifting for aerospace, low temperature, like the list just goes on and on. Pressurization, purging, like this kind of reminds me a lot of Lockheed Martin on a different aspect of it. And obviously a globally diversified presence. Obviously US and Canada make up 41%. They got Latin America, Europe, China, Asia. Like they're very well diversified. So taking a look at how that income breaks down of that 8.9 billion, 46% comes from energy and chemicals. And on the energy side of that, 78% is coming from refineries. So very involved in the oil and gas industry. And then 17% electronics. We got metals at 14, manufacturing at 12, and then medical, food, and other in that little tiny segment. But this is what makes up the total for Air Products and Chemicals. Now the stock trading up 123% over the last 5 years. If you bake in that dividend dividend return, guys, you are getting a much healthier return than the S&P 500. You are actually getting an insanely healthy return that most people think they can only get off tech stocks right now, and this one has just been flying under the radar, which I find relatively interesting. Leading us into numero dos, folks. Let's talk about A.O. Smith Corp. Not doing nearly as well on the capital gain side of what we just looked at, only trading up 63% with a 1.52% dividend yield. Trades at a little bit of a lower premium of only a 28 PE here, folks. And let's just quickly analyze the dividend history, and then we'll figure out what this company does, because currently the dividend per quarter is about 26 cents. Recently just increased going into the end of 2020 here, but just taking a look going back 10 years ago, the dividend was around 16 cents. So they haven't got to the point where it's exactly doubled yet. So they're not keeping up to par of doubling it every 10 years like the last company there. But let's just take a look at the books real quick to see what's going on. As we take a look at the assets, they have been relatively flat. They haven't really increased, but neither has the liabilities. This company looks like it's a cash flowing company where they're clearly just probably paying most of it out in dividends. And taking a look at the performance, it looks like they've met all the earnings expectations, and they've done pretty well from the revenue side. Like I said, these are aristocrats for a reason. Very stable on earnings and expectations here, folks. And just taking a look again, let's see the margins. Like I said, much lower than the last company, sitting at about 12.9% for profit margin with a payout ratio like the last one. This one's got 20% more bleed room, sitting at 41.67% here, folks. They're innovating basically water solutions from like filtration systems and just all the basically your water tank in the basement, things you really don't think about that are massive industry. So again, water heating, water treatment, and they also get into the industrial side, which we'll see inside of their books here. But just taking a look at the comprehensive residential and commercial water heater product offering, like I said, these are things that you overlook that every single person that owns a home is utilizing. And like I said, I bet you haven't thought about ever buying into a water heater company here, folks. And taking a look at the other spectrum with some of the filtration for drinking water, maybe some of you have this sitting under your sink right now, but this, however, is this small end. This company, again, globally diversified like all the other ones that we've looked at here, folks, but just take a look at some of the water filtration systems they're running in China right now, guys. Let's just take a look deep down into basically how they're performing here, because once you build a house and these water filtration systems are set up, they usually have a very long life expectancy, and they actually talk about this in this earnings report, because they say stable replacement volumes to temper down cycles with new upside construction optionality. So basically they're saying there's this balance of all the new construction going on, basically keeping them in a steady flow. And then they're talking about the replacement, because again, something tells me the life expectancy of these things are like maybe 10, 15. I wouldn't even be surprised if they can go up to 20 plus years. So all in all, this is a very interesting business to me, and I wish they had a better dividend increase. And I'd be a little bit more excited about this one, because we all know that anything to do with water utilities, guys, it doesn't get more stable than this. It's an aristocrat for a reason, right? Which is going to take us into number 3, Dover Corp. Now, this is a company that is really performing well right now, trading up 165% over the last 5 years here, folks. So the capital gain side has been stellar. The dividend yield is the lowest we're going to look at right now at 1.31 with a PE ratio that nicely sits in between both the companies we just looked at, sitting at 29. From the market cap side, this company sits in the middle of both of these at 21.8 billion, because again, we had Air Product and Chemicals sitting at 66 billion and A.O. Smith Corp sitting at 10 billion. So this is going to be like our moderator between those two. So let's get right into this with the 1.31% dividend yield, guys. How much has this one been increasing it? Well, we can see from 2011 it was sitting at 0.315 cents to today where we're getting 0.495 cents. We ain't talking about doubling these dividends overnight, but when we're talking about growth perspective, guys, this company gives you a little hint of dividends with long-term dividend increases, while also just stellar, just slaughtering the capital gain growth on the stock side of it as well. So let's just take a look first again. Assets minus liabilities, company sits on about 9 billion against about 5 billion in liabilities. And let's just take a gander from a cash perspective, 513 million in cash, so fairly cash rich. And taking a look, guys, they have met all the earnings expectations, and clearly it looks like they were hindered slightly in the pandemic, because we saw a revenue drop off from 7.14 billion to 6.68 billion. But it appears to see that their quarter over quarter growth has been going pretty good in the first quarter of 2021. And let's just take a look again at the statistics before we see what this company's offerings are. Taking a look at the profitability, guys, again, profit margin instead of about 10%. So it's like the last company we looked at, but not as good as the first one. And then finally, the payout ratio is really small at 38.73%. So this company is leaving a ton of room, probably doing share buybacks and still years ahead of them for dividend increases to come. So that's a good sign. Now let's get into it, guys. So what does Dover do? Well, they do a lot of everything. So their segments can be broken down relatively simply, but like the last few companies, it does get much more broad and integrated. But they have everything from engineering products, delivering industry-leading equipment, components, and software, serving the vehicle, service, environmental solution, and other end-to-market. So we're talking about garbage trucks like waste management. We got fueling solutions. So they tend to build out a lot of the Internet of Things when it comes to the electronics for fueling pumps and even the entire fueling pump systems. And then we got the imagining and identification. So leading the design and manufacturing of equipment, consumables, and software, in addition to providing support services for the marketing and coding and digital textile printing markets. And then finally, pumps and process solutions. They even deal with refrigeration and food products. Maybe what I'll do is leave some of the links in the description below, because you can scroll down and they actually have a video for each one of these segments and their involvement through them, which I think is very, very helpful, because like I said, guys, each one of these segments are massive when you scale them out to the full production capabilities. Because just taking a look at how this breaks down by segment, they've done a great job diversifying this, because obviously with fuel coming back, that might be one of the reasons that we're seeing the margins and the revenue finally increase, because obviously in 2020 we were all on lockdown. Oil hit negative yields for the first time ever, right? And now we're finally seeing all that ramp up, because 23% of their income comes from fueling. So even though that might, well, you want to be a little careful too, because it's the pumps and processing solutions that I wish they included with the fueling solutions, because if you put those two together, we can obviously see that a large segment of their income comes from the oil and gas industry, which is something that you just might want to be ahead of. You just kind of want to analyze how they're managing this going into the electrification of vehicles and a lot of other products. We can see that even going into the worst of times for the fueling industry, guys, the company still performed exceptionally well. But this is some stuff that you're going to want to do on your further due diligence, because today I'm just giving you guys an introduction to these 3 aristocrats, because there are still another 4 on that list that I highly recommend you go and download. Again, the link is in the description below. And I got to give my buddy a lot of credit. He did a phenomenal job with this, so I told him I'd shout it out for him. And I'm just shocked, because these are all stocks that are largely overlooked in my humble opinion. But at this point, I pass the question off to you. What do you guys think about these aristocrats in that description below? And is there anything else that you would recommend that a lot of the community is not talking about? Because to me, this is all a learning curve and maybe something that I'll utilize in my portfolio in the future. So stay cool, stay awesome, and I look forward to catching you tomorrow.